Hey friends and fellow badasses, welcome back to Dear Badass Money Mama. This is where we talk about money the way real mamas live it, through the mess, the storms, and using whatever tools we have on hand to solve life's problems. Today, I've got a letter from Misa, a mama who kept her family alive with grit and hustle even when the money came in sideways. Now, as she nears 50, she's thinking about her long-term security. She wants to build credit and is wondering how to do that after decades of hourly and under-the-table work. She also is helping her son in crisis, and he's dealing with the opposite problem. He's drowning in debt. Her story is real. It's a lifetime of nurturing and surviving on inconsistent income and doing whatever it takes to keep her family afloat. Now she deserves stability and a roadmap forward. So that's what we've got for her today. I'm dedicating this episode to every mama who's resourceful, tired, smart as hell, and just looking for a clear, future-focused path to financial stability. Life is messy and complicated, but your money doesn't have to be. Before I read Misa's letter, remember, you can ask me a question or book a clarity call directly with me using the links in the show notes below. Here's Misa's letter. Dear Badass Money Mama, I'm a single mom with an adult son, and I've been on my own in every financial decision raising him. As I approach 50, I'm scared that I have nothing to show for how hard I've worked my entire life. I've never been afraid of work. I started working at age 12, and I raised my son solo from age 21 while working days and nights. I've spent the last 9 years working a variety of jobs, mostly under the table. Recently, my adult son moved home again and is drowning in debt. I want to build my credit and plan for my future, but I don't make a lot of money, and it's not always regular. I currently have an account with a retail store that I make regular monthly payments on. I've been offered the pay-in-4 programs through PayPal or Affirm, but I can't tell if those will help or hurt my credit score. I want to take one manageable step forward for myself and learn skills to guide my son too. What systems are available to me now, and how can I make smart credit building moves? Signed, Misa. Oh my gosh, Misa. So much here resonates. And first, I want to name that the instability you describe is incredibly common. Traditional financial systems were not built to move people from survival to security. So many low-wage workers, gig workers, and caretakers get pushed to the margins of this system, and financial instability is the predictable outcome. But once you understand the rules, the system becomes stable and predictable. With the right information and with grit you've already built, you can create solid credit without a big income or a steady paycheck. Let's take a moment to recognize what you have built in a lifetime of hard work, and that's grit. Author and researcher Angela Duckworth describes grit as a combination of passion, perseverance, and hope. And she shares that grit predicts our success more than luck, talent, or privilege. The thing that builds grit is showing up for our lives again and again, even when things are hard. And Misa, this is exactly what you've been doing for nearly 40 years. So if anyone's got grit, you do. You've got it in spades. Now you get to use that grit to build something solid and safe for the next chapter of your life. You totally got this, Mama. And while learning about the systems and tools to do that building, I have got you. Here's a strategy you can use to build credit in a smart way. It's an intentionally simple roadmap. It's got 4 steps, and each one can be done in about 20 minutes each, because I know you're busy and you got a lot going on. In the rest of this episode, I'll walk you through each step, and I've got resources for you down in the show notes. But you'll see that you don't need complicated tools, so here's the system. Number 1, pull your credit report. Number 2, set up a low-risk credit account. Number 3, assign a small recurring bill to that credit account. And number 4, set it up to automate the payment in full every month. That's it. That's the whole system. That small recurring payment is enough to establish a pattern of payments that will build trust with lenders and boost your credit score over time. I'm going to give you more details on each of those steps so you know exactly what to do. But if you like this video, please let me and the algorithms know by liking or commenting on this video and by subscribing to my channel. And remember, of course, you can book a one-on-one clarity call with me using the link in the show notes below. Step number 1 is to pull your credit report. This is free to do at annualcreditreport.com. There are 3 credit bureaus and you only need to pull a report from one of them. Don't get into the details of what's on the report. Your primary goal is to check this report for accuracy. Don't worry about whether or not the information is good or bad. Just review it to make sure that the accounts on that report are actually yours and the information is correct. If there's incorrect information, it could mean misreporting by a previous lender or something more serious like identity theft. In the US, your credit is tracked by 3 major credit bureaus. Lenders report on their experience with you, and this gets tallied over time to become your credit score. Your credit score is basically your financial trust score. It opens the door to borrowing money in higher amounts and at lower interest rates, so the borrowing costs you less money over time. Your credit score is made up of 5 things. Your payment history, do you pay on time? This is the biggest factor. The amounts owed, how much of your credit are you using? The length of credit history. Older accounts help, and damaged credit can be repaired by establishing healthier habits in more recent accounts. Number 4 is new credit. A lot of recent inquiries can hurt your score. And number 5 is the credit mix, a variety of accounts with different lenders. It's not a secret algorithm or a mystery. Your score just reflects patterns over time. An important point is that credit and debt are not the same things. Credit itself doesn't cost you money, but debt does. Buying something on credit now and paying off the debt later almost always costs more than saving now and buying later. Borrowing comes with interest, and lenders have every incentive to keep you borrowing, even beyond the point where you can pay it back comfortably. So while it's beneficial to have good credit, with great power comes great responsibility. Debt begets more debt. And with most consumer credit interest rates in the double digits, it can steamroll very fast and balloon out of control. This is a lesson that your son and many others, unfortunately, are having to learn the hard way. A higher credit score simply makes debt cheaper if you need it. But your power comes from managing how much debt you take on and where you're borrowing it from. Which takes us to step 2, set up a lower risk credit account. You've started your journey with that retailer credit card. That's great. Now we want to add more credit diversity to the mix. You asked specifically about PayPal's Pay in 4 and Affirm. You'll see these and other similar lenders with enticing offers to buy now and pay later. And these offers are available to a lot of people at a lot of online retailers. The truth is that buy now, pay later doesn't reliably help your credit. Most companies don't report on-time payments, but they will report missed ones. So think of these offers and buy now, pay later as a debt tool rather than a credit building tool. Right now, we want to focus on systems that help you, not trap you. Instead, I want you to look for a secured credit card or loan or a credit builder loan. Here are 3 options to find them. A credit builder loan through a program like Self or Kickoff is designed for people with little or no credit background. It's kind of like training wheels for credit, but they really do work. On your end, a credit builder account is similar to making a monthly contribution towards a saving account. But on the other end, your monthly payment, which can be as low as $25, is actually being used to pay off a loan. Those monthly payments are reported to the credit bureaus, so you build up that pattern of on-time payments over time. And in the end, you get a nice lump sum of money back to you when the loan is paid. An advantage to this option is simplicity. You set up the loan, you start to pay it off, and you're on your way to building better credit today. For those wanting a more conventional and long-term option, secured credit cards are available to almost anybody regardless of credit. They're offered through most major banks, and they're a good starter seed for building good credit habits. You have to submit a refundable deposit, that's the secured part, but that $100 or $200 also becomes your credit limit. You can start using the credit card right away and keep it open for as long as you like, which builds that credit age. When selecting a secured card, don't worry much about the interest rates or the perks. Perks are a nice to have, not a have to have, and if you get caught up in trying to maximize your perks, it can distract you from your real goal here, which is to build credit. And interest is less important because this strategy keeps interest at 0 by paying back borrowed money in full every month. An annual fee is harder to get around, so keep it simple and look for one with no annual fee, and there are lots of them. The third option is the one I use and recommend wholeheartedly to my clients, and that's to join a credit union. Credit unions are not-for-profit banking institutions that are member-focused and relationship-based. They actually want you to succeed. Credit unions offer a variety of options, anywhere from those credit-building loans to loans that are secured with your savings account. An added advantage is that the member-driven mission means you can get personalized support. You can make an appointment, ask questions, and make sure you really understand the terms of the loan you're being offered. And if you get stuck, they're there to support and guide you. Also, when you're ready to move on to the next level, you already have a trusted partner for that unsecured credit card, loan, or line of credit. If you go the credit card or loan route, step 3 is to set up a small recurring payment that you make with credit. Choose one small thing that you already pay for, something like your Netflix subscription or cloud storage. Ideally, keep it under $25. Once you set up that expense, put the card away so you're not tempted to use it to rack up more debt. The goal is consistency, not convenience. Step 4 of our credit building roadmap is the one that seals the deal. Set up an automatic payment that pays your credit balance in full every month before the due date. Credit cards offer a grace period before they charge interest, so as long as you pay off your card monthly, you won't be charged extra fees. This is how you build credit without letting debt creep in. And that's it for the roadmap. You've opened a credit account, you know exactly what you're using it for, how much it costs, and that it's being paid off every month. Building solid credit really can be that simple. Misa, I wanted to circle back to a couple of things from your letter. You mentioned you've been working under the table for the past 9 years. The way I see it, that work kept your family alive. Still, as you age, undocumented income limits your options for financial security. So as you build credit, start bringing some of that income onto the books, even in small amounts. This opens the doors for future loans, retirement contributions, and benefits that you've earned. About your son, you don't have to and cannot solve his financial challenges. And even though you may wish, you'd had these skills when he was growing up, what you can offer him now is a model for learning how to access that stability. Invite him into the systems that you're learning. Encourage him to visit a credit union or review his debt with a counselor. In this way, you support him without rescuing him. Misa, you have been showing up for almost 4 decades. You survived single motherhood at 21. You have everything you need within you. You've simply lacked access to the right information and systems. This week, Misa, I've got an assignment for you. I want you to make one badass money move. Take one of the 4 steps that you can do in 20 minutes. Pull your credit report, visit a credit union, apply for a credit builder loan, or check out a secured credit card. Just do one thing. Keep it gentle, keep it doable, and celebrate the hell out of taking that first step. Now you're building the bridge to the security that you deserve. I am so honored to walk this with you. You got this, mama. If this video helped you, please like it, subscribe to my channel, and share the video with another mama who's trying to find her financial footing. Remember, you can ask me a question to tackle in one of these episodes using the link in the show notes below. And if you're ready for tailored support, book a clarity call with me. You have worked hard for your money, and you deserve support that works for you. Thank you.